You are watching Bloomberg Tech Europe. Coming up on the show, from fintech disruption to reinventing banking, we explore how AI could reshape deal making, transform competition, and redefine who wins in the financial sector. But what will it all mean for jobs in banking? We explore how AI is rewiring how banks hire, the roles that could be empowered, and those that risk extinction. And fintech giant Klarna's CEO tells me why he sees legacy banks falling behind as AI changes the rules.
I would argue that our odds are pretty good at winning a big market share. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died. It was just a valuation issue.
It affects everything: risk, fraud, marketing, idea generation, customer service, and it's kind of the tip of the iceberg.
So we bring you interviews with some of the biggest names in banking, with insights on how artificial intelligence is reshaping the sector. Welcome to Bloomberg Tech Europe. Artificial intelligence then is changing the face of banking, from the trading floor to customer chatbots. But who is leading the charge, and just how fast are they moving?
Artificial intelligence is reshaping how banks work, how they interact with clients, and how they compete.
It's helping our coders, it's helping compliance, it's helping with HR queries. But then you've also got a lot of top-down use cases. I think the future is agentic, though. That is when we're going to really see the game changer.
Agentic AI, autonomous programs that can theoretically perform tasks for a user without supervision, are the next step for many banks. Traditional AI is already streamlining fraud detection and credit assessment. And with generative AI enabling automated reporting, it's rapidly becoming the backbone of modern banking. However, the pace of development and adoption remains uneven across the industry. The Evident AI Index shows who's ahead. This year's leaderboard is again dominated by American banks, with JPMorgan taking the top spot for another year. Only 2 European lenders, UBS and HSBC, make it into the top 8. And evidence says the leading players are pulling further ahead, innovating at roughly twice the pace of the rest. They're banking on their multi-billion-dollar investments paying off, with gains to the bottom line and better service for customers and clients.
Well, JPMorgan was top of that list, and JPMorgan is, of course, the world's biggest bank by market cap and the most profitable in US history. It's also a leader in the adoption of artificial intelligence. Here are some of the facts. JPMorgan, almost $20 billion in terms of its annual tech budget, $2 billion of which is spent on generative AI. The bank is embedding AI in developer coding and the lender's internal AI assistant called LLM Suite. It's been rolled out to tens of thousands of employees. Longtime leader, of course, Jamie Dimon, says artificial intelligence affects everything at JPMorgan, which has been deploying the tech since 2012.
We have 2,000 people doing it, spend $2 billion a year on it. It affects everything: risk, fraud, marketing, idea generation, customer service, and it's kind of the tip of the iceberg. And so, we're deploying it. Every time we meet as a business, we ask, what are you doing in AI? What are you doing to serve your people? Why can you do better? What is somebody else doing? So we're freely deploying it, and safely. We have a lot of rules and regulations in place for our own data and how we use it, et cetera.
Is it having a material impact on revenues for JPMorgan? If not now, then when?
So we have shown that for $2 billion of expense, we have about $2 billion of benefit. Some we actually can do real detail. We did this, we reduced headcount, we saved this time and money, we reduced errors. Some you can't. It's just improved service, something like that. It's like almost worthless to say what's the NPV, but we know about $2 billion of actual cost saves. And like I said, I think it's the tip of the iceberg. We're getting better and better at it. We know how to do it. As the managers learn how to do it, they're asking more questions. Why can't it do X and why can't it do Y? And then on my phone here, we have a suite, an LLM suite on internal data to do research and summarize reports and scan contracts and do things like that. 150,000 people a week use it. So it's quite productive.
More and more of your employees are using the agentic AI.
Our own LLM. And agentic is just starting, but that will be deployed over time too. But it's also being used for coding. I mean, it's being used quite broadly now. And like I said, part of it is getting your mind working around how you're going to use this thing. And so our managers and leaders have to do it.
If you look out 5 years, are there more jobs in banking as a result of AI or fewer?
I think people shouldn't put their head in the sand. It is going to affect jobs. So think of every application, every service you do, you'll be using AI. Some to enhance it. Some of it'll be you doing the same job. You're doing a better job at it. There will be jobs that it eliminates. But you're better off being way ahead of the curve and retraining people. So we retrain and redeploy a lot of people. So for JPMorgan, if we're successful, we'll have more jobs. But there'll probably be less jobs in certain functions.
When you look at the spend on AI, infrastructure, chips, OpenAI, it's not making a profit. Loss-making, deals of about $1 trillion this year. The hyperscalers, the spend there. What is your reaction when you see those numbers crossing? Are you comfortable with that kind of spend on the infrastructure around AI?
It's a lot. I'm not sure it's all ever going to be totally spent. I think when you look at big tech, like tech that happens like this, and you go look at cars, you look at television, you look at internet, big money's got spent. There were a lot of losers, a lot of winners. In total, it was productive. So take the internet bubble. Remember that blew up, and the amount of people. You and I could probably name 100 companies that were worth $50 billion and disappeared. But out of it came Facebook, YouTube, Google. So there will be real big companies, real big success. It will work, in spite of the fact that not everyone who invests in it is going to have a great investment return.
Jamie Dimon, JPMorgan Chase Chairman and CEO, of course, speaking to me in London earlier this week. So from one Wall Street titan to another, Goldman Sachs is also fast adopting AI. The US lender employs around 12,000 engineers. They've also built an internal AI platform, as well as deploying a generative AI assistant and software engineer. CEO and Chairman David Solomon reckons artificial intelligence will boost growth at the bank through increases in productivity and efficiency gains, but he also says AI will lead to some job losses in some areas at Goldman. I spoke to Solomon at Italian Tech Week in Turin.
At our heart, we're a professional services firm. If you think about Goldman Sachs and the value it brings to its clients, its value is deployed really among three different things: people, capital, technology. And so if you think about AI, AI really allows smart, talented, driven, sophisticated people to be more productive, to touch more people, to have better information at their disposal, better analysis. I mean, this is a journey we've been on. This technology accelerates it, but when I started 42 years ago and I wanted to look at 5 different companies and think about how to compare the trading in 5 different companies, I had to go to the library, I had to go to the microfiche, I had to spend hours really thinking about how to put that comparison together. Obviously today, you can do it in a fraction of a second speaking into your phone. So this journey in providing tools to super productive people and giving them more capacity to serve their clients and to be more productive is obvious, and we've been working on all those tools as most enterprises have. I think the more interesting thing for enterprises broadly, and this isn't unique to Goldman Sachs, because the world is underpinned by technology. Coding is time-consuming, but this technology allows you to code with greater productivity and efficiency. So one great coder now, with a tool such as Cognition Labs Devon, for example, really creates massive coding capacity for one coder, as opposed to having 10, 20 people sit around for a few days. So big productivity there. And then, of course, when you think about operational systems in any business, the ability to accelerate automation and therefore drive more productivity, it's not just a cost exercise. It's actually about taking that productivity and having more capacity to reinvest in growth in your business. We'll spend $6 billion on technology this year. I would have liked to spend $8 billion. but I can't afford it because I've got to deliver returns.
Yeah.
But with this technology, my ability to spend more and invest more in growth and accelerate things that can grow our enterprise, it's more available to us.
5-10 years' time, fewer jobs in banking as a result of AI?
I don't think that's the right lens. I think there are places where the number of jobs, the actual jobs, will come down. But the lens I look at it is, I think we can continue to grow Goldman Sachs. I think we can continue to serve a wider slice of clients with these tools and these capabilities being integrated into the firm, changing our processes. The question, the way I would answer the question, if the firm was the same size and it didn't grow, we would certainly be operating with fewer people. But if the firm grows and you expand and you can invest in other areas for growth, we'll wind up with more jobs 10 years from now than we have today. Just as, by the way, we have in every step along the journey for the last 40 years, as technology has made us more productive. I don't think it's different this time.
So just to be clear, you foresee more headcount in 5-10 years' time?
That's because I think we're going to be running a much bigger enterprise.
Okay. That, of course, was David Solomon, Goldman Sachs' chairman and CEO, speaking to me at Italian Tech Week in Turin. Coming up, fintechs are using AI to challenge legacy banks. But what does that mean for customers and also for jobs? Klarna CEO weighs in. Our interview is next. This is Bloomberg. Welcome back to Bloomberg Tech Europe. Now, AI, as we've been discussing, is shaking up banking, empowering fast-moving fintechs as well, like Klarna, as they target legacy lenders. The New York-listed buy now, pay later company wants to become an all-encompassing AI-powered financial super assistant. I spoke exclusively with Klarna's CEO, Sebastian Siemiatkowski, about how the disruption is reshaping the industry, the workforce, and what he thinks is next for banking.
I think it comes back to the vision that we had at Klarna 10 years ago, which was very basic. It said, in the future, there will be a digital financial assistant. It will analyze your spending. So to us, this was basically where we believe retail banking was heading. And a little bit like self-driving cars, don't know when, but know that it will happen. And that's the future. And it has profound impact and consequences for the banking industry, because to a large degree, banks today don't need to be competitive because people don't want to switch, and it's difficult to switch, and they need to bring all the data and all that stuff. So they don't need to be that competitive. They don't need to be that great. And this would mean that in the future, customer mobility would be ultra high. People would switch to whoever gives them the most value for the least money. And it's going to drive down the excess profits in the retail banking industry.
What would you say to those, though, who would say, look, the legacy banks, they have the data sets, they have the resources, and then, in fact, rather than leveling the playing field with fintech, AI is actually going to give a greater advantage to legacy banks because of those factors?
Well, look, I've always said that, in my opinion, there are three players of companies that can play in this space, right? It's the big tech companies, Google, Amazon, etc. It's fintech, or it's banks. There will obviously be incumbents that try to, re-innovate themselves, be forward-leaning, apply the technology and so forth, and some of them may be successful. But there will also be fintechs. And in general, if I look at it today, I would argue that companies like ourselves, Klarna, Revolut, and others, because we already are banks and we've kind of gotten across that, being a small startup, we're not small startups anymore. We're fully regulated entities but we have modern tech stacks. We don't have, the Cobalt code running in the back mainframe and all of that stuff. We don't have, all of those challenges that big legacy incumbents have. So I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died. It was just a valuation issue. In 2021, 2022, the valuations dropped, but fintech was growing, the revenue was growing, the customer adoption was growing. It was just the investor sentiment that changed for a few years, and now it's going to come back, because now you see Nubank, you see Revolut, you see all this stuff happening, you see Klarna, Affirm, etc., and you're going to be like, wow, you know what?
No.
Actually, the disruption is happening.
Now, I know you think deeply about this as well. How do you see financial services, the workforce, when it comes to financial services, changing in the next, say, 5 to 10 years?
Well, I, for one, have been trying to be a little bit more honest about this because I feel a lot of my tech bros are being slightly, not to the point on this topic. I think there is a massive shift coming to knowledge work, and it's not just in banking, it's in society at large. There are 8,000 people in Brussels that work as translators, and I would argue that most of that can be done by AI today already, even though obviously some quality assurance and so forth would still be valuable to have humans to review. But the point is that you don't need as many as we did. So there is a massive shift coming. I think society will have to figure out what are we going to do, because yes, new jobs will be created, but in the shorter term, that doesn't help the Brussels translator. He's not going to become a YouTube influencer tomorrow. So you may find other ways in how we support people from a society perspective. For us as a company, we have increased our revenue per employee from $400K to over $1 million per employee in the last 2 years. We haven't hired, we've a little bit hired a small recruitment, but generally we've shrunken the company from 7,400 people to 3,000 now. And that's at the same point in time while the revenue and number of customers has grown significantly. So we're simply not recruiting, which means that we can avoid doing layoffs. And we have taken a lot of the savings in payroll cost and reinvested that into an acceleration of the compensation of our employees, which means that they are seeing a huge benefit from us applying AI internally. So I think that there's paths in how you can make this work, both from a society perspective and a company perspective. But in the end, our job is here to drive as much value at the best possible price to our customers. And so we need to use these technologies to accomplish that. And then in general, I think there will be implications for a lot of knowledge-based work.
Sebastian, before we let you go, I need to ask, a personal question. How much and to what extent are you using personally AI in your own life, maybe outside of work?
Well, I use it all the time. And actually, since May, what I did pick up was vibe coding. So I've been vibe coding and exploring our code base because I'm not an engineer by training. And I must say, it's been mind-blowing to me. It's been fantastic. And I spend now, my wife is complaining because when the kids go to sleep, I'm like, hey, can I just go and vibe code a little bit? So she's not too happy with me currently. But it's just it's so intriguing. It's so fantastic to learn these technologies. I think people should not be afraid of technology. If you're worried about a technology, embrace it, learn it, educate yourself, find out how to utilize it. And then you'll be less worried because you know what you're actually facing, right? Otherwise, it's the things that you don't know that your people get nervous about.
Okay, the CEO of Klarna, of course, Sebastian Siemiatkowski, speaking to me about the impact on jobs, of course, and how they're positioning and building AI into their business. Coming up, the AI race in banking then is speeding up. We've demonstrated that with US lenders as well, dominating the global leaderboard for adoption. US lenders. The CEO behind the AI Banking Index gives us the latest on the leaders, the laggards, and the likely losers. That is next. This is Bloomberg. Welcome back to Bloomberg Tech Europe. Now, Evidence AI Banking Index ranks how quickly and how effectively the world's top banks are adopting artificial intelligence. This year, JPMorgan extends its lead with US banks dominating the top 10. So what is driving the divide and what is at stake for those falling behind? I sat down for an exclusive interview with Evidence CEO and co-founder Alexandra Mousavizadeh to get the inside story.
JPMorgan is in the lead once again, and not only that, it's also jumped even further forward than the rest of the banks. So we're really seeing this bifurcation between the leading banks and the lagging banks. But what JPMorgan specifically did is start out really early. Jamie Dimon, famous for saying that the bank is an AI-focused organization, an AI-first organization, all the way back in 2017, 2018, and really leaned heavily into that. Thought about the bank as a tech company, established a AI research lab with Manuela Veloso at the helm, really rethought the operating model, the talent that it needed to attract in order to shift the bank from a traditional legacy bank into an AI-first company.
What do you take from the fact that the majority of the banks in the top 10 are US lenders?
There are a couple of reasons for that, I think. First of all, they started earlier. All of what they have as characteristics that they share is that they started early. They are also in an environment where there's access to a great talent pool. There's proximity to the tech industry, so there's proximity to the learnings and the onboarding, but also a mindset of experimentation and an innovation mindset that is unique for the US, really.
Is Europe and the UK, are we significantly behind? HSBC is in the mix, UBS is there amongst the top 10. Should we be concerned about the adoption rates of AI amongst European and UK lenders?
I would say that in the UK there is maybe a little bit of a lack of focus of what it means for creating the best environment for AI adoption. You really need a strong talent pool. There is a great startup community in the UK, but they do disappear and they go to the US when they reach a certain size. So there isn't the same kind of proximity to the technology that is particularly conducive for AI adoption in the financial services.
On headcount, workplace, in terms of jobs in the banking industry, you project out 10 years. Will there be more people working in banks or fewer?
It's going to be consolidated, in my view. So if you look at the leading banks, they're actually the banks that are hiring the most AI talent, but also hiring the most, generally speaking, because they are growing their market share. Their tools for their customers and chatbots and interactions are more seamless and better for their clients, and so and frictionless, not completely, but getting there. And so that growth of market share is going to mean that you can't, you're also going to need to hire not just AI talent, but also a lot of other, analysts and marketing people and HR people, even if AI is going to touch upon all of those areas. The area where when we're talking about job losses, there is absolutely, right now we can see there's a lower intake of junior people in the banks. But what people forget is looking at all of the jobs that are being created because of Gen AI and agentic AI also.
Evidence CEO and co-founder Alexandra Mousavizadeh. Now that is it for our AI banking special. Next month, we're going to dive into defense and how AI has upended that industry. I'm going to be speaking with some key players in the space, including the co-CEO of Helsing, the UK head of Palantir, and the managing director of General Catalyst Partners, someone who has been front and center in terms of investing around defense and the importance, particularly, of sovereign defense. The opening trade is up next. This is Bloomberg.